We've woken up this morning to a leave result in the EU referendum. This is a historic day and we've seen some very big moves in markets. The pound has opened 8% down against the dollar. We've seen a 5.5% fall against the euro. The European stock 600, the main European index, is down 9%. And we're seeing the implied opening for the S&P 500 down 3.5%. We've also seen David Cameron resign this morning, and we've seen a fairly aggressive response from the EU as they look to try and discourage further fragmentation following this vote. So just thinking about the impact on portfolios, here we've got the big move in the pound against the dollar. Clearly that move in terms of the currency devaluation is good for your US holdings because they will revalue 8% with that currency move, but that's netted off by the 3.5% fall in the markets in general. Equally, your European equities will have revalued around 5.5% on the currency, but that's obviously offset by the move in the markets. When we look at the bond parts of portfolios, this move has led to the Treasury yield falling 30 basis points this morning. So that obviously has a positive effect on the bond prices within the portfolio. So Treasuries, particularly long-dated Treasuries, have moved higher, gone up in value. However, there is obviously more credit risk in the system, so some of those higher risk bonds have devalued a bit on that metric. So net, you're up to marginally down depending on the risk profile of the bonds. Where we go from here is really anyone's guess, and in a sense it depends on how this Brexit debate develops. As a rough marker, we look at the MSCI Europe, and at the moment the P on the MSCI Europe as of last night's close was around 16 times. We think that can go back towards the mean of that particular index, which is around 15% downside in terms of a PED rating. Add to that the potential for earnings to fall between 5 and 10%, and you could see somewhere between a 10 and a 20% fall in European markets over the next few weeks to price in this particular move. The impact on markets will clearly be whether it is a soft or a hard Brexit and whether we see any conciliation between the two major players. Clearly the EU will be looking to avoid this being a precedent for other member states, and on the other side we will learn a lot from the new Conservative leader and whether we're going to have a Eurosceptic Conservative Party coming into power. If it's a hard exit, then we think there is a likelihood of another rate cut. We'll probably see some QE in the coming months, and that will have implications for the pound and for the financial sector within the UK. A new Chancellor is also likely, and in that instance we probably will see a shift towards more fiscal stimulus within the economy and the ramifications of that on the stock market. What is clear is that we are going to have ongoing weakness in currency and asset prices. This is the first response, but a lot of the new world will need to be digested over the next few weeks. We'll have delays to investment, higher savings ratios for individuals in the UK, and lower growth. In terms of what to buy, well, here we've got a list of the UK names on our buy list. It's rated in terms of the risk to Brexit, as you can see here on a 0 to 5 scale. Clearly you've seen differing responses in the equity market, with those dollar earners not going down particularly aggressively this morning, and some very big moves at the other end of the scale. So please speak to your broker in order to discuss what you might consider buying over the next couple of weeks. Thanks very much.